Gold has historically taken all the headlines, but last week, silver may have taken center stage with some of the biggest metal news you might not have heard about. Now, the US has officially declared that silver is a critical mineral. But what does that really mean for prices, availability, and maybe even your portfolio? Let's take a look at some of the upside, but also review some of these risks. Now, last week, the U.S. Geological Survey updated its critical minerals list, including both silver and copper among 10 new entries. Now, the list essentially signals that the U.S. no longer views silver as just a commodity, but as an essential for national and economic security. Now, especially if we're taking a look at areas such as electronics, solar panel, the military industrial complex, and medical tech. Now, at the same time, this does open the door for Section 232 tariffs or new trade restrictions on silver imports and processed silver products. And that's because that critical mineral status does trigger heightened scrutiny here. Now, if we take a look at the bull scenario, the first thing we're going to take a look at is the supply issue. Now, as the U.S. basically imports about 2/3 of its silver, with critical status, policymakers may restrict imports or favor domestic production. Now, that means there's going to be some significant volatility in the paper market, but also a higher risk for physical shortages. If we're taking a look at tariffs as well as trade shocks, well, if silver products face tariffs, the cost of raw versus processed silver starts to diverge, and that may drive investors to flight into physical silver as a hedge. Now, if we're taking a look at the industrial demand, silver is crucial for areas such as solar panels, EVs, and the green tech demand, which is global. So definitely could impact prices here to the upside. Then we also have to consider central bank buying. Silver's new status could accelerate official buying by sovereign as well as central banks wanting strategic metal holdings. Now, that structural demand overlay supports long-term price breakouts. So definitely, again, something to consider, but that still remains to be seen as banks are now looking to diversify significantly more, and we've seen much of that, especially in the white metals, including the platinum groups. Now, if we're taking a look at investor narrative, when markets start to treat silver like gold and industrial hybrids, then the upside becomes significant. You could see silver go from levels well above $50 an ounce to even $65, $70, and in some cases, some analysts are calling $85 before we really get into uncharted territory or an absolute unknown. But where could things go wrong here? So let's take a look at some of the bear scenarios or some of the risk scenarios. Number one, tariff backlash. If tariffs impose higher costs on industries such as solar power and electronics, silver could drop. Processing bottlenecks may increase cost and reduce consumption. Now, let's take a look at the oversupply possibility. If the U.S. mining gets ramped up aggressively, or recycling starts to increase, which we know there's a big push for, the critical scarcity narrative may then start to weaken, and silver could go completely stagnate or even fall. But let's take a look at the macro headwinds as well. If interest rates stay high, the dollars remain strong, the yields continue to rise, silver, being a non-yield asset, could actually eventually lose interest. And then let's take a look at the speculative froth. If markets run too far ahead of fundamentals, you risk a sharp correction. And paper silver or futures markets could unwind very, very rapidly, which we have seen many times, especially in silver. But let's take a look at tariffs, trade, and then the geopolitical angle here. Silver's newly declared critical status means that the U.S. can apply Section 232, which we've mentioned, investigations, which is used previously for steel and aluminum on processed, but this can also be applied on processed silver imports. Now, that threatens the supply chain and causes significant disruptions. Given that China's dominance in refining many metals and minerals, any U.S.-China trade escalation or export curbs on silver by China could really trigger a global supply shock here. Bonus upside for metals. Meanwhile, companies and countries will ramp up silver domestic processing. Now, domestic mining producers may receive government incentives such as tax breaks, faster permits, And this could essentially alter silver's cost structure, but the shift in competitiveness is very much debatable here. Now, what are we going to look for, and what do you really want to watch going forward? Well, if you're looking at short-term trades, if you believe that the upside here is really positive, then consider getting into silver ETFs or physical silver bullion. Remember, this is not financial advice. Make sure that you speak to your portfolio advisor and make sure that it makes sense in your portfolio. Silver is a very volatile and high-risk investment. But watch for tariff announcements or Section 232 review updates. Hedge positions. If you fear that the risk scenario, if you feel that there's a more of a risky scenario here, you might want to move to silver options or small positions, or hold gold/industrial metals combos instead, and that will help hedge some of the potential risks here going forward. Now, some of the key data points you're going to want to watch for: U.S. silver imports and export data, and stocks that are related to silver coins. Or stocks of silver coins, I should say. Now, if we're taking a look at government tariffs and Section 232 developments on silver, something you're going to want to absolutely keep an ear out for. Mining productions and refinery outputs for stats for silver. Dollar strength in particular, you really want to watch the interest rates and yield trends, because the macro will absolutely matter, and you can watch it as we get closer to every Fed rate announcement. You can watch the volatility in the metals. Now, the time frame here, this story might play out over 1, maybe 2 years, so 12 to 24 months. It's not really a week-by-week play, but if you get in early, it does have the potential to capture some structural upside before the crowd. Now, this isn't really just about price trending. It's about reframing silver as a strategic metal and a strategic component in a portfolio, not just a cheap alternative to gold. Now, that could shift investment behavior very, very significantly, and it really should shift how it's held within a portfolio itself. Now, silver's status isn't just moved from the cheap metal to a national security asset. If you're not paying attention now, you might miss the next really big leg, either up or potentially down. If you're looking for early alerts, and you're looking for tariff shifts and potentially supply shocks in the metals market, definitely hit subscribe, turn on your alerts, and I'll break down the next moves when it matters most. But that's it for now, everybody. I will see you tomorrow morning at the opening bell.